So welcome guys to my channel Last Minute Study. So I've already started with the financial management series, and this is the second video in that series. In this video we are going to cover what is financial markets measurement, what is financial market returns, and how can we measure the financial market returns, and what is the significance. So basically, what is financial market? So financial market refers to the gain or losses. It refers to the gains or losses from investment in financial instruments, like for example stocks, bonds or mutual funds. So measuring these returns help investor assess performance, compare investments and make informed decisions. So how can we measure the financial market returns? So basically there are four methods. The first one is absolute return. First one is absolute return. Second one is annualized return. Second is annualized return. Third is average return. And the last one is index return. So we are going to deeper in each of the returns. So first one, absolute return. So what exactly is absolute return? So it basically measures the total return over a specific period of time. Total return over a specific time period. Sorry. So the formula for that is absolute return. We can also call it as AR. Basically it is final value minus initial value upon the initial value. And into 100. So it will be much clearer if we take an example. For example, so if you invest rupees 1000 and you get rupees 1200, so return is calculated basically. So final value is 1200. So 1200 minus 1000, that is initial value, upon 1000 into 100. It basically gives 20% returns. So investing in a stock of 1000 rupees, you are getting a value of 1200 rupees. So the return the stock gives is 20%. So let's move to the next return, that is annualized return. This is annualized return. So what annualized return is, basically it measures return per year. Return per year. So it basically accounts for compounding over time. So formula for this is CAGR, that is compounded annual growth rate, CAGR full form. So it basically calculates final value upon initial value raised to 1 by n minus 1. So where n is number of years. So it can be calculated for each year how much growth is there. So basically keeps a track for growth. So example is, so if you invested amount is 1000 and it grows to rupees 1331 and time period is 3 years. So we can calculate the CAGR by CAGR is basically 1331 upon 1000 raised to 1 by 3 minus 1. So which gives it approximately 10%. This is a CAGR. Then let's move to the next formula, next return, that is the average return. Average return. So what is average return? It is basically the average of periodic, that is monthly or yearly returns. So what is it exactly used for? It is used for comparing different investment options. So if you are confused whether to opt for stock or mutual fund, you can use the average return to get a better understanding in which instrument to invest in. So last fourth one is index return. So what exactly is index return? It basically measures return of the overall market. Return of the overall market. So for some famous indices are like Nifty 50, then there is Sensex, then there is S&P 500, that is a US stock market. It's basically, what it does is it helps in benchmarking portfolio performance. So what is exactly the significance of measuring returns? So first one, it evaluates investment performance. Second, it aids in understanding the risk return analysis. Third is it helps in portfolio comparison. Fourth, it assists in financial planning. And last, it is essential for benchmarking against market indices. So to understand it in a much easier way, we can use a diagram for this. So financial market return, first is absolute return, second is average return, annualized return, and index return. So what absolute return is, simply calculate the gain percentage. It is one time calculation. Average return is basically the mean of periodic returns. Annualized return is CAGR formula. We can calculate the compounding growth across all the years. It is time adjusted. Index return is basically market index percentage, examples Sensex and Nifty. So I hope you all understood the what is market financial market returns and the methods to measure it. And let's meet in the next video.